And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report, daily stock market show where we break down the news, the charts, the information, give you guys some insight and analysis here from the coaches at Tackle Trading on a daily basis whenever the markets are live. We're live 12:30 p.m. Eastern. If you are watching this show for the very first time, make sure you click subscribe, click the bell, come back and join us each and every day. Got a full crew here today. We got Frank here on Friday, Frank Day,
howdy.
I think.
Yeah,
let's just call it Friday, Frank Day.
We'll just go with that. We've changed it many, many times, but today we'll go with Friday, Frank Day.
How you doing, sir?
Doing great. Thank you very much. It's always great to be here. Always look forward to Fridays hanging out with the team live and in person. And I do have a face. You just may never see it.
Yeah, we've seen it in the past. We just got to get you a new camera. We were talking about that in pre-production. There's no doubt about it. Speaking of the face reveal and the camera here, we've got Matt as well, lead analyst. Matt, how you doing, sir?
Tim, I'm doing absolutely fantastic. I'm excited to be here on the report, and I'm not excited to have my camera shown, but I'm back in the office as requested by you. And
look at that handsome face. Look at that handsome face there.
It's making Marky so happy. By the way, I like that Ace hat. When does baseball start up again?
First of all, the Ace hat is the greatest hat in the history of hats. The traditional green and yellow, brim, flat brim. This is the best hat in the history of the business. How the A's doing? How's baseball doing? I'm not sure.
When are they starting? Yeah. When are they even going to play? Are they even going to play? I'm sure.
You just never keep up to date on any sports. You call yourself a sports fan, but you never know anything about anything that's happening in the sport.
Not true. Here's what I know. The NFL is probably going to start on time. The NBA has already negotiated a comeback. I think hockey's going to do it. And baseball's arguing about how few of games to play, and they didn't come up with any decision on it yet. So
give me the current negotiations between Major League Baseball's Player Association and the MLB.
The last I heard was a few days ago. So if something happened since like Monday, Tuesday, I might not be up on it. But last I heard, the owners wanted less games. The players wanted more because the owners
aren't even negotiating.
Yeah,
the players are negotiating in good faith, and I hope they have a Major League Baseball season. But if they don't, the public will blame the players, but they shouldn't. They should blame the owners. And currently the players have an 89 game slate, sharing profit sharing, all that. We'll see how it goes, but I think they'll have a season. How big of a season? So. I don't know. I'm just celebrating golf's back.
Are you guys still bitter about the baseball strike in the mid 90s?
I'm not bitter. I'm not bitter, but again, I didn't blame the players back then either. So it does seem foolish to blame the players on absolutely everything and not the billionaires. It's like,
well, that's the public, right?
It reminds me of Hertz offering 250 million shares just to give the CEO a nice little bonus check.
Hey, long before speculators became day traders, they were baseball card speculators. And, in the early 90s, people were buying baseball cards to fund kids' colleges, right?
Oh, yeah.
And then that strike totally increased. I mean, it destroyed the industry for a long time. So,
well, Mark, you were big in that industry. You had a baseball card shop. You were all around that back in the day. So yeah, it's never recovered what it did where baseball was, and it really kind of lost the national pastime at that point. NFL kind of took over, but I'm still a baseball guy. I still love the sport.
I do as well. By the way, they're playing Little League Baseball and high school baseball here in Utah and across most of the country. I would expect the MLB could probably figure this out and get some sports back up and running.
Does this mean we don't have a lot to talk about since we spent
There's not a lot of news
talking about baseball?
Not a lot of news in the market today. It's going to be an interesting day, though, and a very important day from a technical perspective. Even though it's a light news day, I think this is a real critical day for bulls and bears in the short term in terms of price action. I do want to break all the action down and all the charts. Matt, give me a read on that S&P chart, because obviously yesterday's sell-off was huge, biggest candle since mid-March. We tried to rally at the open. The overnight action was bullish, but then you can see it there. Matt, break it all down for us.
Yeah, let's first of all break it down on an intraday time frame. Yesterday, I put this out on Twitter last night, that today, in my opinion, was coming into today on Friday was a more important trading day, not investing day, but trading day than what we saw yesterday. Obviously, the deep pullback is going to impact almost everybody out there because, you're net long coming into those types of scenarios, and nobody wants to predict when those are going to happen. They've been few and far between in the last 2.5 months. But yesterday was just an absolute I want to say it was overdue, right? We've been overdue for a deeper correction. Did we want it to be in one day? No, of course not. We'd rather have a standard retracement coming down 2-3 days, into those support levels. But you don't get what you always want in the market. What you did see was just the continuation of the entire sell-off in the entire market yesterday. There was only just a handful of stocks that were actually up yesterday. It was broad-based across every sector, every industry, and almost every stock out there. But yesterday, what I've seen on the intraday perspective, when I posted that on Twitter, is you see this just deep sell-off all through the coming into the close yesterday. Right after the close, you slow your momentum on that intraday chart. And you really find that support level right there pretty aggressively right there at 3,000. And then you see that double top, double bottom. You see the breakout coming into the European markets last night. You see a quick little retracement coming down and kisses off that 30-20 level, which is an old resistance on the intraday time frame. And then you rally into the entire European Open. It was on the cash open where the U.S. came into all of this like, oh, I'm still a little concerned about about yesterday. And you saw just a very aggressive sell-off coming into the cash open earlier this morning. And then where do you find support again? You find support right there at that 3,000 level. And so when you're breaking this down on an intraday time frame, you see those very important levels of support and resistance really kind of form. And it's not shocking to have that form right there, that extremely significant whole number right there at 3,000. And then when you come back out to the longer time frames on the daily chart, you see how important a day like today is. After we saw that bloodbath in the market yesterday, we talked about it yesterday, in quite detail, where every single one of us were like, today we need to see slowing momentum, right? We called for a doji yesterday. Give me a doji, give me a doji, give me a doji. Don't give me a V-shaped recovery. Don't give me a tremendous down movement in the market, because that would throw off so many really good quality technical setups. And so you wanted to see that slowing momentum on that daily chart. You saw it on the intraday chart. And where does it come down into? Right there at 3,000, right where that 200-day moving average is. A close underneath 3,000 today, it probably throws a wrench into the analysis coming into the weekend. You probably see a little bit more selling coming into the close if we start to break those intraday support levels. And why that's so important is when we look at some of these distressed areas of the market, like American Airlines is in the news here. You see that upward movement in price, a close underneath 16, it throws off the analysis. You're above the 9 EMA at this point. United Airlines, same type of thing. You're trying to reclaim that 9 EMA. Delta here, you're trying to reclaim that 9 EMA. Carnival Cruise Lines here, you're trying to reclaim that 9 EMA with the potential trigger on Carnival, above $20. So, if you basically got the close here today, right now, market shut down, we're just no trading. You can map out a trade here on Carnival, with a trigger above the high of today, maybe above, $20, a nice little significant whole number, with the stop loss. Maybe you play it bar by bar. But the reality is, if you see a continued sell-off in Carnival, and I'm seeing this not just in Carnival, I'm just using Carnival as an example. I'm seeing this in many areas of those distressed areas of the market that have been beat up this week. I'm seeing this same type of technical situation start to form, where if you start to sell again, you really have a hard time. Where do you place a stop loss? Are you taking too much risk by putting a stop loss underneath support with the trigger above the high of the day? So today, to me, is very important if you're coming into that market next week, preparing for some of these bullish trades.
Yeah, and
Hey,
some
Matt,
of those
I got a
areas.
question for you, Matt. All right, so we haven't seen it this month because everybody's been euphoric off their minds, but overnight action, pump up, market open, sell off. We saw that all throughout the month of May, that the overnight jacked up the price. One of the most fascinating stats in a year of fascinating. 2020 is going to go down in the record books in so many ways. The S&P did not gain any money in the month of May while the market was open. It gained all of its gains overnight for the entire month. Now, June, people became really euphoric. Well, last night, jack up, market open, sell off. Are we back to that pattern maybe, Matt?
You certainly could be, Mark, but again, I do feel like those support levels have to hold here. You know, and that data we saw in May was quite unique. I mean, it was literally like there were no gains from the cash open to the cash close from 9:30 to 4, and all the gains happened on the overnight action. But that's, I don't want to say it's par for the course of what we've seen in the last decade, but we've seen the futures market significantly outperform on the overnight action than it does during the actual trading day. I think for this market to really give us some really good technical setups coming into, you know, the weekend, you know, and I'm specifically thinking about the scouting report meeting later on today, is we need to see this market hold support, to hold its ground, to not retreat from a selling perspective. I just, you know, if you see additional selling underneath the 200-day moving average, it doesn't mean we're not going to get a pop on Sunday night's futures open. It doesn't mean we're not going to see the market rise next week. What it means is it's just going to throw off so many good, you know, perhaps really good technical setups in some of those distressed areas of the market.
Yeah. I mean, if we do break below this level, I mean, where's the next stopping point here on the weekly chart? Maybe the 2,800 level, 2,750. You got the rising 20 as well. You know, it breaks up the charts, doesn't it? I mean, every one of us are going to see the same thing. These things need a doji if you want to play these retracements.
Well, you mentioned the weekly chart. I mean, in the last 2.5 months, this weekly chart has meant nothing. I mean, nothing in any capacity.
Why do you think that? I mean, it just hasn't triggered any signals, and we're playing on the intraday and the daily. Is that what you're
there's no technical setup here. I mean, the market's not focusing on long-term analysis. I mean, everything's every support level, every trigger that's happened is on intraday analysis. And it just goes to show you that this market is not an investor's market right now. This is a trader's market. And if you're looking at weekly charts right now, it is just, what setup are you getting on a weekly chart here?
Yeah, it's not really giving you
the only setup you're getting is things go really up and really down, right?
Yeah, I mean, I can't give you, I can make up some stuff real fast if you want me to on the weekly chart.
Well,
I can start drawing random lines for you if you want, but
I don't really care if it's a daily, weekly, a monthly, or an hourly chart. Where's the next stopping point?
I love my weekly charts. The only thing that matters to me at all is if for some reason we sold off and it came and bounced off the 200 weekly. That's the only thing. I love
like 2,600, right? Are you talking about like 2,650?
Yeah, but it will go up a few weeks, right? It'll go up a few points next week and the week after and week after. But yeah, I think you could have a really nice bounce off the 200 weekly. Other than that, and I love weekly charts, but it's just market's crazy.
See, right there though, I think
that goes down to the 2,600 weekly support level. I mean, the amount of capitulation and just fear that this market
that would be
grasping, there's nothing to see there at that point. That's why it's this market is a short-term analysis market. And so I just don't, I honestly do not think you get any additional information on a weekly chart right now.
So for and Frank, I want to get your take on this. So, and this is really the juxtaposition I think the market is in. For investors and value people to want to get back into this market, maybe they believe in a reopening theme. They don't think that we're just going to have, the S&P at 1,500 or 1,800, and they do want to get involved. Maybe they missed the rally or whatever it is. Those longer term thinkers, they got to have such depth in the prices that would just destroy the short term charts. There's no question about it. So it would just blow up all the traders in the market. Frank, what's your read on this whole market condition? The charts, the sell-off yesterday, where we are today, all those kind of things.
Listen, I think Matt really summed it up nicely. The selling was needed. Did we want it all in one day? Well, I guess depends on what you were doing, right? So, but we still are holding trend. We're talking a lot about S&P, but still holding up really nicely in the NASDAQ as well. On the S&P, what I'm kind of looking at that old 2960. I think Matt nails it right on the head. That 3,000 area with everything there, intraday support, 200-day. I mean, there's just big number, lots of reasons to believe that that's a key level. But even just a hair below that, we have, that was resistance throughout most of May, right? That 2960 area. And I kind of think in steps. So, if we break 2960, if we break 2960, 29, which is going to line us up with the 50-day moving average. If we break that, now we're really starting to beat the heck out of some of these charts, right? So, that would really throw in a ton of cold water on some of these patterns. So that's kind of how I'm approaching it. I'm looking at this as a pullback opportunity that does need some time to develop. You know, that's why it would have been nice if we would have sold did yesterday in 2 days even, you know, but we didn't. And that is what it is. I think we can look, if you look at the hourly chart, you'll notice that, you know, we held that support. We've now created some resistance in the form of today's high. That would probably be that first, you know, aggressive signal to me that maybe we can start moving back in when we start to make, you know, break some resistance on that hourly chart.
You know, obviously markets are going to be important here at the close as we going through the rest of the day. You know, the overnight action, the cash open, it's been very volatile for the last several hours as we're trying to figure out what to make of this end of the week here on the market. Matt, the charts on most of the indexes kind of look the same to me. Dow, S&P, NASDAQ, Russell all feel very similar. The NASDAQ probably a little bit stronger because it didn't have as deep of a pullback. Quick look at the indexes if you can. Just run through them real quick.
Yeah, I mean, late last week, early this week, we broke up above that 200-day moving average, set a new high right there at 27,500, and now you're retracing back down into 25,000 here. I don't have the same opinion on the 200-day moving average on the Dow Jones that I do the S&P 500 here. You're really looking at that significant hold number at 25,000. So, I mean, if you were to remove this 200-day moving average, right? Let's just take it off the chart here. And you were just focusing on the trend pattern, the support and resistance zone, and you're looking at the Dow Jones, and you're looking at that, you know, 1, 2, and then the deep pullback we had yesterday, the slowing momentum you had today at 25,000. You break this down from a 30-minute chart, you see the double bottom there at 25,000. After the cash open sell off, you see it kind of tick down there at 25,000. If I was to look at that on the S&P 500 without that 200-day moving average, I mean, it really does look almost identical there. So I don't have the same opinion on the 200-day moving average. And quite frankly, I don't have the same opinion on the 200-day moving average on the S&P. It just so happened to coincide with that very significant whole numbers of 25,000 and 3,000, in my opinion. But you know, being the 200-day moving average right there at 3,000 just gives it a little bit of additional support level. When you're looking at the NASDAQ and the Russell 2000, very quickly, the NASDAQ is the strongest of the bunch, no doubt about it. It's been the strongest of the bunch throughout the entire, you know, market, you know, the euphoria of the market over the course of the last 2.5 months. And that one-day sell-off we're seeing in the NASDAQ here, you know, the S&P, the Dow, and the Russell were showing weakness on Wednesday coming into, really kind of Tuesday pre-Fed, Wednesday post-Fed, Thursday. They were showing some weakness before that. The NASDAQ was actually showing some strength coming into Tuesday, coming into Wednesday, and even had a pretty good close on Wednesday in spite of some of the sell-offs we saw in the Dow Jones, in the Russell 2000, as well as in the S&P 500. But right now, you're right there kissing off that 20-day moving average, old support right there at about 9,600. So, you know, you're going to have some good setups in the S&P. You're going to have some good setups in the Dow. You're going to have some good setups in the NASDAQ if you hold those support levels. If the NASDAQ holds 9,600 right there at the 20-day moving average, if the S&P holds 3,000 right there at the 200-day moving average, and if the Dow Jones holds its retracement right there at the 25,000 right there, and if you show how important these retracements are, you know, Tim, I'm going to draw you a nice little, I'm going to give you a nice little Fibonacci retracement number here, Tim, in the short-term analysis. Looking at the Dow Jones, you're at a 50% retracement right between rising moving averages. This is a very important day, in my opinion, if those buyers who have been driving this market have confidence coming into the weekend to continue doing what they've been doing over the last 2.5 months. If you close underneath 25,000, if you close underneath 3,000, if you close underneath 9,600 on the NASDAQ, that's going to throw that's just going to throw off all that short-term technical analysis. Now, again, it doesn't mean you're not just going to have 4 million people just randomly hit a buy order on, Monday morning. That's not what I'm saying. It's going to throw off some really good potential short-term swing trades, especially in those distressed areas of the market. So here's hoping for those support levels to hold if you're on the bull side here today. The Russell 2000, very similar to what we're seeing in the Dow Jones, a little bit of a deeper retracement. We had that 200-day moving average is performing very similar to what the Dow Jones has been doing recently. And you're kissing off that 1350 level here too. So I'm not looking at small and mid caps right now. I'm seeing a little bit more aggressive rotation out of small and mid caps right now. But if those levels hold in the NASDAQ, the Dow Jones, and the S&P that we talked about, I do believe you're going to have some good technical setups. So again, just somebody who's wanting to trade some bullish strategies coming into next week in those distressed areas of the market. I'm hoping those areas of support hold today.
You know, I think this close here today is going to be real critical on all of those things. Monday mornings and Mondays in general during the relief rally have been more bullish than bearish. But during the sell-off back in March, people forget Mondays were the most bearish days. Those were when we were going limit down like early in the morning, Frank.
Yeah.
So the conversation over the weekend is going to be very interesting among traders and investors and how people are processing where we are here. Mark, what do you think the tone and the mood of investors are out there? I mean, are they looking at this kind of with some panic, some fear for the first time? Do you think this is one of the more legitimate risks? What's your read right now?
No, it's going to take another thing to get them to panic. I was interested in that. And so I went to the top 20 Robinhood holdings. And yesterday, most of them increased their ownership. So I think that buy the dip mentality is just strong, right? Because that's worked. Anytime there's been a dip, even in this run up, eventually it's a money-making opportunity. So why, I guess it makes sense that, if that's been working, one down day, no, in fact, just an anecdotal evidence, I had a few people that they're like, well, what should I buy? What should I buy on this dip? I mean, so I think dip buying is prevalent. It's going to take it's going to take more than one punch, right?
Right. It's when that buying the dip fails, right? They get in, it sputters out, after 2 or 3 days, and then flips around and breaks that. The second dip's a lot harder to buy, right? The first one's not so much.
Yeah. So yeah, I mean, until there's like a 2-3 punch that shakes confidence of your average trader, average investor that buys dips, they're just going to keep doing it. And right, if the Dow's up 1,000 points next week, do you think they're going to be scared at the next sell-off after they've made money on this one? No. So it's I think the investor thing. I mean, some people might be a little more cautious, a little more hesitant. I know I am. But your average trader investor, no. They're buying the dip.
There was only one economic data point over today's action, Matt. That was the consumer sentiment report. A pretty important report, actually, comes out on a monthly basis on consumer sentiment. It did come in higher than expectations. Matt, we see that trending in that direction across a lot of the economic data. What was your reaction to the data?
I honestly didn't really have that much of a reaction. I mean, the expectation was 75. It came in at 78.9. Consumers historically, even though we increased here today, when you're looking at, the consumer confidence here, it's above 90 is a pretty positive reading on the University of Michigan consumer confidence. So, we saw that massive dip we saw just a couple months ago in March, and it's slowly starting to recover, but we're still not everywhere even close to where the euphoria truly was. Consumers are still very, very concerned about what they're seeing out there, and rightly so. They should be concerned. If they're not concerned, they got the blinders on and they're an ostrich ducking their head in sand, pretending like the economic data is not there.
Yeah. Let's keep working through the top-down markets. A lot of the news today that's interesting, actually, individual companies, some of the setups I want to get to later in the show. So let's kind of, go through the crude oil, the commodities and whatnot. Let's start with crude light if we can here. Mark, obviously, you get the rig count data. I don't know if it's come out yet here on a Friday morning. You'll be talking about that.
It will come out soon. As soon as we get it, I'll share it with you.
Sure. And but what are you seeing in crude oil here? A little hesitation, doji. I mean, in terms of holding that trend, you got to like that doji if you are a bull looking for a little flag pattern there. Mark, what's your read on crude?
Yeah, I mean, from a technical standpoint, I'll let Matt and Frank break down the technicals a little bit more, but you get a little consolidation, nice bounce off the 20. Oil traders they're just not as robust bullish, right? Oil traders are my favorite people on the whole planet because I identify with them, right? Because like if I see anything that possibly could go wrong, I'm like, oh my gosh, we need to be concerned about this, or we need to put this into our calculations. And they're the same. And so they're just not as bullish. They're not like, oh my gosh, the sky's falling. But all of the euphoria from a sentiment standpoint has died out a little bit. So relying on technicals right now is definitely the way to go because the fundamentals, the sentiment, it's a little bit of a wash right now.
Matt, Doji on the 20. I mean, is that more of a high base? You'd rather play the breakout, or is there anything there on that Doji on that moving average?
Well, excuse me. I don't think anything that's transpiring today, and I'll wait for the rig count to really kind of just solidify this opinion, but I don't think there's anything happening right now that changes what I said yesterday about crude. That $35 level of support right there with the 20-day moving average, I would not fault anybody for buying that $35 support level. I just wouldn't. It's a pretty significant area of support. You can map out a nice trade with the stop loss underneath 35. So I wouldn't fault anybody, but I'm just not a fan of rounding retracements. I just don't like them because, you know, and again, it's just personal preference. It doesn't mean it's a bad setup. It's just not something I personally like or enjoy. I like a little bit more standard, you know, 3, 4, 5 day pullback, nice little V-shaped pullback coming into those support levels. And the reason I like it like that is you have typically what you'll see is, and I'll break this down on a 30-minute chart here. Typically what you'll see in like a nice little 3, 4, 5 day pullback is you'll see just a standard, you know, lower low, lower high intraday trend where you can map out trend lines and trigger above those trend lines. When you have a U-shaped retracement, all of a sudden when you're pulling up these intraday charts, I mean, you're looking, okay, even if I trigger above say 36.5, where am I going to place a stop loss? And even if I trigger above 37, I have all these other intraday levels of resistance that are going to fight me on the way back up. And so to me, it just kind of throws the analysis a little bit less probable here. And so for me, I'm still looking at that $40. I'm not looking to touch it at that 35. Now, to give that a little bit more credence here and to justify my opinion, one thing you're seeing, and the pattern here is very consistent. I've talked about that extensively on oil over the last month. When you see these just massive rises, high base, massive rises, high base, rises, high base. One thing that you're seeing that throws a little cold water on this bullish retracement here is the concept of momentum. Momentum is very important to a trader. We'd like to always trade in the direction of the momentum, both from a micro time frame analysis, 2-minute charts, 5-minute charts, 15-minute charts on a daily perspective. And you see momentum in everything, right? You see momentum in candles, you see momentum in trends, you see momentum in patterns. And one thing you're seeing is you're seeing a little bit of decreasing momentum as the market is starting to inch its way higher and higher and higher in crude. You really, and I'm looking at this $10, double bottom here. You go from $10 all the way up to about $26, a 16-point price movement. You go from $23 all the way up to $35, a 12-point price movement. You go from $32 all the way up to $40, an $8 price movement. So as crude has been inching itself higher and higher and higher after we went negative crude in April, you're seeing a little bit of slowing momentum. You're seeing a rounding top at that $40 mark. If the market held its high base, you could easily trigger above $40 with a price target right there at about $45, which would justify a $7 price target based on what you're seeing with slowing momentum from 15 to 12 to 8. And so you had a really, really, really good technical setup here on crude developing. But what happened yesterday with the massive sell-off in the market, obviously crude was going to be prone to that sell-off as well. And so I think it does throw off the analysis from a bullish retracement perspective. So again, I wouldn't come in and criticize anybody who's like, yeah, I'm looking to buy crude at that $35 handle. Absolutely not. That's a historic resistance area acting as new support. That's right in between, two rising moving averages, the 90 MA and the 20 SMA. You're kissing off that 20 SMA. So I wouldn't fault it. But because of what I'm seeing in the slowing momentum and trend, the rounding top at $40, and the pattern that had been developing, that high base breakout that we've seen, happen 2 consecutive times, that throws that pattern off as well. So I'm a little bit hesitant from a technical perspective on crude.
Dude, I love that breakdown. First of all, that's amazing the way that you kind of explained that. I appreciate that very much.
That was,
the momentum, the change, the whole thing about where that momentum is. Great education right there out there, Matty. Frank, anything to add to the analysis there?
Obviously, Matt really summed it up nicely. The only thing I'll really add is, much like Matt, I find, with crude playing the little high base, I find that to be easier, not just today, but overall. I just find that to be an easier way to trade crude, a little little high bases or low bases as opposed to the retracements. But Matt's right. I mean, if you said you bought it, I'd say I get it, but I'm not with you. I'm just not against you.
Gold is next here, guys. We're range up in terms of just back and forth for the last couple of months. It's the same analysis we've had for a very long time in many of those regards. I mean, one thing I was thinking about here today is if you were long the equity on something like GLD, is this a day where maybe you cap it and add a little bit of that cash flow back in? Matt, we were having that conversation earlier in the week with Tyler, and I think those are some logical things you can do when you are range up. Matt, quick read on gold if you can.
Well, gold is the pattern. In gold has been consistent for literally what now two consecutive months here.
Plus months.
Yeah, at least 2 months.
Gold can do this. Gold can stay stagnant for longer than you want it to. There's no doubt about that. And I'll be the first to say, based on what the Fed's doing, based on what the government's doing, based on the debt, based on inflation, all that, gold should be well above 2,000, well above 2,000. Okay, but it doesn't have to do it in your time frame. Gold isn't Zoom, right? Gold's not a growth stock. Gold is the most boring, old-fashioned tradable instrument you can possibly get your hands on. You know, a 10% price movement in Zoom is a 0.1% price movement in gold. It is boring, and you want it to be boring. You don't want everything in your portfolio to be sexy and driving and growth-based. No, you want a well-diversified, well-oiled machine from a portfolio perspective. So, you know, gold's just sitting there in that neutrality. And we talked a little bit earlier this week and last week as well, Tim, about how to approach gold from a perspective. And you said, you know what, I'm not gonna cover it because I want to. If it does break out, I want to catch that, right? And I got no problem with that in any capacity. If you're looking at GLD here, which is the number one instrument most people utilize when it comes to investing in gold, because it matches the underlying spot price of gold. And for those of you who are new to ETF trading and whatnot, you have commodity ETFs that invest in the underlying asset class, i.e. S&P 500, SPY, XLE, XLU, XLRE, all of those, gold, GLD, silver, SLV. You have those types of ETFs, and then you have the commodity ETFs like natural gas, UNG, and crude oil. When you're investing in GLD, you're investing in gold. Now it's the paper gold, but you're still investing in gold because the underlying ETF owns the underlying commodity. So it's really one-to-one correlated here. As GC approaches that 1750 area, well, right there you have that 164 area. You're sitting right there at that very, very known level of resistance. And so, if you're looking at the Tapper 20 covered call system and you're looking to trade covered calls, this would be the time you would initiate a call option. Okay, you don't want to initiate a call option when the market's at support, right? You initiate a call option when the market breaks support or when the market holds resistance. Those are the two key points from a technical perspective that you want to sell a call option. And that's not just on gold, that's on absolutely anything you're looking to cash flow on from a covered call perspective. And so if the analysis says, okay, I've had 3 consecutive days of nailing that 164 level, which is a very significant level of resistance, and then that 165, which is the high there, yes, you could be selling that call option to bring in a little bit of cash flow to offset some of the time that it might take gold to really kind of break out and fly. Now, the question is, how aggressive do you want to be on that? Because gold could break out here, guys. It would not shock me to see gold break out. So in terms of this, you might want to adjust, say, the delta you're looking to sell. Traditionally speaking, if you want to bring in a lot of cash flow when markets break support, you want to sell a little bit more of an aggressive delta. So for you tackle traders out there, pro tip number 1, when the market breaks support, you want to adjust to selling a more aggressive delta, maybe even an in-the-money call option to take advantage of the volatility and to bring in a little bit more cash flow to offset the risk to the downside movement. When the market's sitting at resistance, holding, you might want to sell a little bit less of an aggressive delta so that you can capture growth. That is the most difficult conversation cash flow experts and traders have when it comes to when to sell and what delta to sell on that covered call. So once again, what helps you is if you're thinking we might be breaking out here and you don't, but we're not doing it so far, maybe you come out and you say, let me sell, a 29 delta, a 30 delta call option to bring in a little bit less cash flow, take more advantage of the potential growth opportunity. When the market's violating support, breaking support, when we see increases in volatility, maybe you say, okay, let me go sell an at the money call option, maybe somewhere around a 50 delta, bring in a little bit more cash flow and also a little bit more protection because you're protecting somewhere around 50% of the drop in price initially. Let me bring in a little bit more cash flow, but I'm not going to get any growth. So that's the conversations we have in cash flow systems. What deltas to sell based on what probability, and it really to really help you make that decision, it's always about where you're at in relationship to support and resistance and where you expect the underlying instrument to go in the short term.
Mm-hmm. And those higher delta plays, obviously, they do bring in the bigger credit and you're going to have more theta. And if you're a pure cash flow trader, I know there's some advantages to that. But then if you do break out, you got to roll it, you got to manage it. I'm personally looking just from this perspective, Matt, I'm thinking about the lower delta stuff to still give it some upside. It was that balance we were talking about earlier in the week with Tyler and yourself about, you know, when you're approaching these type of things, you have some tactics and you have some strategies that you can work through. You don't have to always use the same delta. In fact, good cover call traders know how to kind of navigate that as conditions change. Love that as well. I mean, guys, gold obviously up at the top of the range. Let's look at the dollar here. A couple green candles for the first time on the dollar in some time, quite frankly. Came off of that 96 level on the index, came off of the 26 level on UUP, and we are rallying off the bottom. Now, I'm not bullish on the dollar. I don't think anybody would be bullish on the dollar. In fact, this feels like a bear setup developing that whenever it does come up into some old support and whatnot, falling moving averages. Perfect bear retracement kind of projection there. What's your read on the chart of the dollar, Matt?
Yeah, we talked about this yesterday. We talked about it the day before. You're looking at one or two things. I said at the time, you're looking at a potential low base forming or the potential bearish retracement. We got the latter. It is forming a bearish retracement. And so let's let the dollar come back up into these resistance levels before you look at any potential swing trade here. But when you're looking at the major currencies across the board, the United States euro dollar, massively elevated price, starting to show that retracement. I want to be touching this retracement until we got at least down into that 20-day moving average, which would also be a 50% Fibonacci retracement. When you're looking at the US dollar, Japanese yen pair here, nothing to see here. Both of these two currencies have been behaving really weird against one another, but again, not unusual in an environment of volatility and fear-based, simply because the yen is the safe haven currency for the Asian zone, and the dollar is the safe haven currency for the Western hemisphere. So you're never really looking to trade the US dollar, Japanese yen when you have this type of fear-based volatility that we've seen develop over the last two and a half months in the marketplace. Now, again, the euphoria of the stock market is one thing. Okay, that's one thing. Currencies and commodities are much more correlated to the true economic condition than the stock market is. The stock market is the casino at this point. Literally, it is the casino. So when you're looking at these safe haven plays, they kind of go up and down against one another. So there's really nothing to see here. The British pound versus the US dollar, you're starting to see the beginnings of a bullish retracement on the British pound. Maybe you come into 125, maybe you come into 124. For you currency traders out there, keep an eye on 125, 124, how this currency behaves at those levels. I'd like a 124 bounce here, so keep an eye on the British pound. When you're looking at the currencies that really kind of give us a little bit of more momentum that we've seen recently, you're really talking about those currencies that are tied to commodities. You're talking the New Zealand dollar, the Australian dollar, and obviously the Canadian dollar with their economic system predicated a lot on oil, a lot on drilling as well. And when you're looking at the US dollar CAD here, you know, that big rise in price that we saw yesterday on the dollar against the CAD, now you're coming into that 20-day moving average, real volatile candle today, but really starting to set up that bearish retracement on the dollar, on the CAD a little bit more aggressively and quicker than we're seeing on the pound and specifically on the euro. When you're looking at the Australian dollar, US dollar pair, and you know it's a boring day in the stock market when I'm breaking down the micro analysis in the currency market here. But I am starting to see some setups happening in the currency market, specifically on those commodity-based currencies. You're looking at the Aussie dollar, US dollar, nice little pullback coming down into 68 cents on the Australian dollar. 20-day moving average is catching up to it. I'm starting to like that bullish retracement on the Aussie dollar, but it still needs some time to Still need some time to cook before I'm looking at actually getting into a trade there. And we're seeing the exact same thing on the New Zealand dollar. So if we're going to rank the currencies later today, but I will tell you right now that the three highest ranked currencies will be the New Zealand dollar, the Australian dollar, as well as the Canadian dollar. And that goes in line with those commodities that have been doing fairly well, you know, gold and oil specifically.
I love that as well. Guys, that's our market skyline. There's more interesting information, I think, in individual companies today. So I'm excited to get into that. We're going to make a transition right now. A couple of things. Number one, as always, whenever I do these transitions, gives me a chance to maybe promote something, you know, pitch something, whatever it might be. And I really enjoy our Friday features. There was a great one here today by Justin Driscoll, great Team Tackle member, newer member of our community. And if you haven't seen that on the blog, it's on the Tackle Today blog. It's a free blog.
Justin wrote that today?
Yeah, Justin did. It was awesome.
Oh,
if you're watching,
my
Justin,
goodness.
good job.
Big shout out to Justin. I thought that was you or Mark, and I was going to give you either one of you some credit there today. I was going to be like, hey, did you guys wake up and actually care about things today? Because I mean, this is an amazing write-up. Took some time. Oh wow, and there's me. I didn't even read I read it on the email. So wow, this is awesome. Well,
it was
Justin. Very proud of you.
Fantastic message about being a beginner, working through it, learning
That's nonsense.
lessons.
You can't put that picture in there, Justin. That hair is too good. That's Frank Martin type hair. It's way too good, Justin.
Yeah.
That was good stuff, Justin. That was well done.
He's a great kid too. I'm really happy to have him part of our community. And that's the amazing part, you know, about getting to know everybody out there in Team Tackle land. There's no question about it, guys. We appreciate you guys so much. Great job, Justin. If you haven't read the blog yet, read it, comment below, let him know what you think. I know these students, these traders, these community members, they would love to hear your feedback. Let's talk companies here today, guys. Let's first start. I think probably Hertz is going to be
I got a game.
one.
I've been waiting for Hertz to come up. I got a game. All right.
Sure. All right.
Quick game. All three of you play. Top 10 most traded stocks on the exchange today. Right now on the exchange today.
Hertz is number one.
Pure volume.
Pure volume.
Just pure volume, not total money.
We're going to go Matt, Tim, Frank.
I'm going Hertz number one.
Hertz is number one. It's been number one most days this week. 190 million shares traded right now. We'll get into the news on it in a second. Tim, give me another one. We'll play 2 rounds.
Dude, AMD is always up in the top. I'm gonna go
AMD
AMD.
is wrong. You are wrong again, Tim. You are the most terrible game player in the history of game players. Frank, you're up next.
I'm going to go ahead and say AAL.
AAL number 2, American Airlines, very popular stock. Robinhood traders, let's trade some more. Matt, you're up next.
I'm going to go with, let's go with Chesapeake.
No, it is not. Sorry.
Oh,
Tim.
they're rotating from bankrupt to bankruptcy. I like it. That's a new form of analysis. I didn't have to think I had to start evaluating. And thank you, Robinhood.
Dave and Buster's earnings.
Oh,
play.
Tim, you are literally.
Tim, listen,
used it all.
I'm going to do you a favor, Tim. You know, I'm going to give you this one. Tell him Norwegian.
All right, Frank,
Norwegian Cruise
2
Lines.
points.
I was going to go with Carnival.
All right, and I'll give Matt another point. Carnival.
Only
Tim.
one more guess each.
Yep. So.
Well, it's down to Frank and Matt. I'm 0 points. They're both.
Well, I
but
still
we
want
still
you to
wanna see
guess
you go
because
0
the
for 3.
mockery.
All right, let me think here. I mean, small companies probably, the thing about pure volume, it's not really a fair game. It should always be based on price and volume. How much actual capital is moving through the markets? Buying 8 billion shares of Hertz at $3 isn't that
Tim,
important
come on
to
now.
me. Quite-
When's the last time Mark gave you a fair game?
Nobody
Tim,
cares.
The
what
game
are
you
you
guys
having?
play?
You know what Tim's having for lunch? He's having a Waburger.
Probably one of the other airlines then.
Yeah,
American.
United's way high.
I'll go Delta.
Congratulations, you get a point.
All right.
Frank, for the win.
I'm going to go with United.
United for the win. Other companies,
Hold
Ford,
on,
General Electric.
Hold on, I got one. I got it.
No, you started.
Frankie.
Frank went 3 for 3. You only got 2 for 3 because you went Chesapeake.
What did I go with? I went Chesapeake. I went with Hertz. Who else did I go with? I don't think I did a third.
Well, I don't know.
Anyways, my third would be
Carnival.
my third would be Genius Brands, Mark.
Yeah, Genius Brands. And I like the volume. Genius Brands, who at the low was a 5-cent company. Like at the March lows, 5 cents.
Wow.
Genius Brands is a perennial top 10 traded volume. And guess what I got? I got a little present today. They started options on Genius Brands for the first time ever. Rocking at about 400% volatility.
Oh,
Ooh,
man, I feel bad for those new traders buying.
It's like the option traders, the option makers were like, oh my gosh,
this is nasty.
we can make a ton of money on this.
That is a Wall Street shot at Robinhood. That is just not good at all.
So they created a whole option chain. While you were doing your crude analysis, I was like, I'm just going to go check because I've been thinking that they would do it. And I started to laugh, and I wasn't laughing at you. I just giggled because I was like, oh my gosh, I have a Genius Brand option chain.
There is no way they're making money on
click
this.
open interest in on that gamma column. I mean, you got to look at the open interest. They just created them.
I don't even want to even entice anybody to buy something. I don't even want our team knowing there's options on this company. I'm upset with Mark for even bringing it up to our community. And and I want to be very clear. You're not making money on options by buying options on Genius unless it skyrockets in value. I mean, it's Christmas morning for me today with options on Genius Brands. I'm just saying, don't trade your child support money on this company buying a call option. I'm just saying, don't do it.
Just remember, they were at 5 cents in March, and nothing has changed about the company. Like I swear, it is the name only, right? Genius Brands.
That is the Wall Street market maker coming. Hold my beer, Robin.
Like, there's been no news. There's been no new product. There's been no anything, right? It's just, for some reason, this stock became very traded, and now it's just, now they have their own option.
Guys,
congratulations.
To buy an at the money call option, you are paying 25% premium to buy an at the money call option. This is not going to work out well for kind of like Arnold was saying. For millions of those new traders, this is not going to work out for them.
There's 2,500 contracts on the
thing is, guys,
strike.
all the market has to do, you could go up 5 consecutive days, and all the market has to do is drop a third of that, and you're dead.
Not a good.
Let me teach the new traders something. There is one variable in trading stock. That is price. It's called delta. It either goes up or down 1-to-1 against the price. In options, you got delta, you got theta. But you got one that is very, very big, and that is called Vega. And when you have a 400% implied volatility rating, you're not looking to buy those options. You're just not. That is the market saying, please donate your money to us. Please. It's like with Hertz. You know, Hertz is filing of upwards of $1 billion worth of new shares, 250 million new shares. What do you think that is, guys? You might as well just open up a GoFundMe page for the CEO of Hertz.
That's a good way to put it.
I mean, did you guys ever think you'd live to see the day where a $4 stock on the monthly options, like 5 weeks out, has $1.50 bid?
That's nuts.
It is crazy. 400% implied volatility.
I mean, because buying the shares outright, let's just not do that. Let's buy a $1.50 option at $4.
Hey, Mark, Alex got a good question. Can I sign you up for $15? You can go buy a few McRibs, nice little 4 Delta at the $1 strike price, buddy.
If you don't think I've already been
I was going to say, he's already.
Oh, come on. You know me, right? I saw that thing. I couldn't hit sell fast enough, right?
It's so funny.
Free lunch today.
Yeah, lunch money. There's no doubt. I mean, the one strike, the way Mark loves it is that he knows it can only go to 0. And so it's an 85-cent risk.
I can only lose.
It's his favorite thing in the market right now.
It's it is my favorite thing.
Go sell one contract just to get lunch money.
Just to be able to buy lunch.
Oh no, Matt! It's because I believe in the fundamental nature.
I know you do. I know you.
I believe in this company. I'm willing to invest $85.
They're one of your favorite industries, content and brand management. Mark, do you know what they do?
I don't know what they do.
They do content and brand. The brand
make kids
management.
DVDs or something.
Yeah, they
Mark
license them like
Mark knew that was going to trigger me. He did that on purpose.
he did.
Well, it's just Genius Brand. I've been
And
wanting
he's
to
gonna
talk
have a
about
big
Genius
smile on his
Brands
face
for
while he's
2
eating his
weeks.
lunch.
I regret picking Genius Brands. Can I change it to Tops? Was Tops
Yeah.
on the list?
No,
Top,
it's
I don't
not.
know about tops. I do want to get some more takes on this Hertz
Yes,
thing
but
though,
do
because
not buy options with 400% Vega.
It is
As-
tough to make that work.
It's
What would
tough
Lauren
to make it
Lauren
work.
say about that?
do you give the company any credit here for cashing in on this?
Oh,
selling-
the most genius thing. I mean, this is the new thing,
This
right?
is
They become
dark, evil stuff. This is terrible.
So when Genius Brands was spiking about a week ago, they issued like 62 million new shares. They're like, oh my gosh, we can fund our company for years. And so they issued like 62 million shares, and like the market cares about that. I mean, this is where we are right now.
Yeah, Hertz says, hold my beer. Here's two.
Oh yeah, Hertz was like, yeah, listen, you ain't got nothing. We're bankrupt, and we're going to issue $500 million worth of shares.
I say it tongue in cheek, but I'm dead serious. You might as well just open up a GoFundMe for the board of directors and all the C's at Hertz, because this is the most ridiculous thing I've seen in the market for a long time. Hertz is going bankrupt. They are going bankrupt. Stock owners don't get paid out. And Mark, you made a wonderful point in the pre-production show when you said the only thing this is good for is the executives and the bondholders.
Oh, bondholders are loving this.
This is a cash grab from Hertz, and I hope to God the judge does not allow this to happen, because it is obvious cash grab here.
Mm-hmm.
It's let's take $1 billion from the stock market and let's give it to the bondholders. Who are bondholders, right?
Who are the bondholders? Wall Street,
financial
hedge funds,
corporation.
executives.
So
if you're selling a ton of shares, you're putting liquidity and actual supply out in the market. Why is the stock up 50% today?
Because
why not?
Dude, we left the realm of rational thought on Hertz a while back, bro.
It's crazy news. Obviously,
once again, I should have put my whole account on Hertz yesterday. What could have happened? I could have just lost everything.
I got no problem with experienced traders coming in and taking advantage of the day trading opportunities in Hertz. I got no issue with that.
Mm-hmm.
I got issues with Hertz executives going for a cash grab when they know damn well the company's going bankrupt. That's who I have the issue with. We make fun of the new rookies coming in and investing in Hertz like it's just not going to go bankrupt. But for a veteran trader coming in and taking advantage of intraday timeframes on Hertz, I got no issue with it right now.
Yeah. Next company I want to talk about is Sony, and I got a bunch of gamers on this call. All 5 of us actually. We do. Who doesn't love games? I mean, in some form and fashion. Video games been a part of my life since I was a little tiny kid. Even Dad loves games, just not video games. But gamers here rejoice. Sony is announcing the new PS5, Matt. And I actually saw some mock-ups of the two. There's 2 different versions of it. One that has a disk drive and one that does not. That's completely digital. My question for Sony is, why not just pull the Band-Aid off and go
pull
completely
an Apple. Eliminate the port and make you go Bluetooth, right?
Yeah.
I don't know. There's still a lot of people that prefer going to, getting a game and putting the disc in or whatever the case might be. So I understand it, but most games are downloaded digitally now, especially with those younger generations. I think this is a big year for Sony, and it's a big year for Microsoft. The Xbox and the new PlayStation, the next generations, are coming out this year. I mean, the latest versions, PS4 and the Xbox One, came out in, I believe, 2013. So, we're 7 years removed, and we've had a lot of technological advances since then. And I'll tell you, I'm looking forward to it. I promise you, I'll have one. I'll have a PlayStation 5, guaranteed.
Yeah, Frank, you going to pick up a console? I know you're more of a PC gamer.
Yeah, I'm more of a PC gamer. I'm not much of a console player. Every now and then I'll get a console game. I'll eventually probably buy the PS5, but I assure you, Maddie will have it long before I do.
Mm-hmm. Gaming has been fascinating in general. I'm trying to even, look through the sector. Microsoft, when does Microsoft come up with the Xbox, Matt? You mentioned that.
Time frame this year. It's holiday sales.
Yeah.
And don't forget, Amazon's got their New World MMO that's supposed to be launching at sometime this year as well.
Amazon does?
Yeah.
What is that all about?
It's an open world MMO. I don't really, you know a whole bunch about it, but it's an MMO game. They've got a big developer working on it. You
Like
hear it's supposed to be good.
Minecraft or something?
No,
Like,
EverQuest, Warcraft style. I think it's
You
more.
went with Minecraft over Warcraft in your analogy?
well, I'm trying to think what other big public companies just have big MMOs. I mean, are they doing some kind of, obviously competition thing?
Yeah,
What business are they not going to get into?
They're going to get into all of
They
them.
got their greedy little fingers and everything. But guys,
I'm telling
gaming is massive, massive business for the market.
Mm-hmm.
Yeah,
Yeah.
it's
versus Amazon.
Like $13 billion industry yearly.
Yeah. Boeing next, if we can here, Matt. Obviously, the relief rally on Boeing was impressive through the last couple of weeks. We talked about the company quite a bit, but then there was some more reality checks in the news here today about some production on 737s and whatnot. Matt, what was the news on Boeing that you had?
Oh, they are halting their production. I was messaging Arnold. They are halting their production on the 737 MAX plane. This is par for the course with Boeing. I mean, if you've tracked Boeing and that 730 MAX from March of 18 till today, this is what Boeing does, right? They put out these rosy projections. Hey, we're going to do this at this time frame, and then it never comes to fruition.
Mm-hmm. Frank, what would have to happen on this pullback with Boeing for you to kind of map out an entry point on some kind of long position? Obviously you got that whole congestion back there between 125 and 150. You got rising moving averages, but the volatility of just the run up from 125 to 225 is incredible. The pullback now, I mean, obviously anybody's going to be interested in it, but it's not quite ready yet. Frankie, how do you start to map that out in your head as to what you'd want to see?
Well, one, there's nothing Boeing can do to get me to want to trade them. But the chart, I've seen this chart a million times today. Well, maybe not a million, but a lot. So the first thing, I'm going to look at is, are we slowing in the momentum? And I think we do see that on the intraday right now. In the case of Boeing, you'll notice that yesterday's high is lining up pretty close with today's high, which is also coincidentally both above the 9 EMA. So now I can kind of start mapping out where would an intraday breakout be, right? In the form of, and that would put us at just shy of 192 right now. If I look at an hourly chart and I look at that, it's going to look like, well, if this did break 192, that's kind of the first positive step, because that looks like a head and shoulders, right? A failed breakdown there on that hourly chart. And then I start thinking, what else is in the way? I've got to deal with that 20, but I'm probably getting that 20 hourly if I break that 192 resistance. If it takes a few days, the 50 hourly is probably lining up. I want to clear out stuff. That's why, I like things that are strong trending one way or another for pullbacks. That's my preferred way to trade them, because I hate when things are in the way. Does the 50 hourly mean anything on Boeing? I don't know, but it's something that could get in the way, right? It's something that could push us back down. So I'd like to kind of clear and basically turn that intraday trend up. Do you get that? A lot of times being that patient, it just leaves you behind. So, I might not see that at all, but that's kind of how I'll go about it. Hey, where do the intraday traders start to see some bullish signals? How does that translate into my longer time frame, i.e. the daily chart?
Mm-hmm. Yeah, you guys know me. I played the Boeing breakout on the run up, and obviously I am looking for a new entry point. In my opinion, personally, I think you can buy that breakout intraday back above. I don't know if it's 191 or if you want to wait till it gets above 200.
192.
Yeah, it's just 192. If you want to get technical on the breakout itself, and yeah, I see it technically. I wouldn't have an objection to it. I've got all sorts of options. I got so many pullbacks that look just like Boeing that I don't like Boeing. It's no secret. They're off of my list. I have no interest of trading them whatsoever. I wish I would have joined you, Tim, on that breakout. Don't get me wrong. Hindsight being 2020 and all. But we can be picky, right? We can be picky. We're still going to apply the same technicals. Just because I wouldn't trade it doesn't mean I'd go bearish if you trade your breakout there, right? So I'm not with you, but I'm not against you.
Maddie, what about
Frank, you hate Boeing so much from a trading point. What would the setup have to be?
High base for 2 straight weeks with a tight consolidation range of $2 with the potential trigger easy above like 200.
Yeah, I guess I'll know it when I see it. I'll know it when I see it. I don't even know what
the heavens and the earth
need.
and the stars all to align with no risk.
Yeah, I mean, basically, it would have. Yeah, I mean, it would be weird. It would be. It'll happen eventually. One day, it will happen.
Frank, why is Boeing off your list? Because I obviously have a no-fly zone too. Like I never ever trade Goldman Sachs. I just never do.
Yeah,
Right?
yeah. Well, I hate Boeing as a
hate
company
them so much, and I think
they're my.
I don't want to. Yeah. So what's it?
I mean, they're my. First
right
off, yeah. So first off, they're my Goldman Sachs. I hate them like you hate Goldman Sachs. And so that's the number one reason. Just it's personal. I'll admit it. I'm not going to trade, angry, but it is personal. The other part is
angry trading is the best form of trading.
Listen. Do not listen. Do not listen to Matt. Right? Usually, you should listen to Matt.
No,
right
do
there,
not listen to Matt.
I was joking. I was joking. That was a joke. That was a joke.
I know. But beyond that, it's pretty gappy. It is. It's become a very gappy stock that can very easily hop right over your stop loss. And sometimes it's not a dramatic gap, but go trade some options on a $200 stock. It doesn't have to be dramatic to notice that gap, right? And so the gappy nature of it. I mean, it's great when it's gapping your way, sure, but what about when it's going the other side of things? So it's behavior, that things that gap, I'm not having it. I mean, it's always a possibility, right? I can't get rid of that possibility unless I'm just a day trader, which that is not who I am. But if I see something that's displaying those type of characteristics, I'm not gonna jump in. I'm gonna wish everybody well who does. I cheer for everybody when they tell me they got to trade on Boeing. Bull or bear, I'll cheer for you. But I'm gonna stay away from things that behave that way as well. So this is a 1-2 punch of bad behavior, and I really do not like the company, which keeps me away. And it's not like I don't have all sorts of options to trade, right? We don't have to trade things we don't like. You don't have to trade Goldman Sachs. Anytime Goldman Sachs is shaping up, there's another big bank you can go trade, right, Maddie?
Yeah, I mean, it's just not named Deutsche Bank or Wells Fargo. They're on the list too. But the reality, guys, is in a world that you can trade absolutely anything, you don't need to trade everything.
Yeah. And I think that's a huge lesson any beginner has to make and learn from to be able to transition as you become profitable consistently, is that you don't have to take every setup. You have to wait for your rules to kind of apply and whatnot. I love all that analysis, Frank. That being said, if it does break back up, I'm probably going to personally play that.
Well, I'll be cheering for you.
And Tim, breaking down this Boeing chart, I mean, it's a tough trade. You don't have a pure technical setup here. But I like a trigger at 192. I like a trigger at 200 on a conservative. The only question is where would you put that stop loss here on Boeing? Could you get it all the way down underneath the pullback of 167? Most likely not. You would be taking on too much risk in that environment. So could you put it underneath that 180 or that 178? It's just, that's the open question, is stop loss placement when it comes to the Boeing trade here. I see, Frank and I both, immediately when we pulled up this intraday chart, we both looked at that 192 level as the first trigger. The conservative trigger, probably a higher probable trigger would be above 200 here. So, it's just a matter of how aggressive you want to be on the trigger and how conservative or loose you want to be on the stop loss.
Yeah.
Let's round up some earnings. Go ahead, Frankie. Last thought.
I was just going to say, if you're looking for a more conservative entry, what you're probably looking for is that intraday break to happen, the aggressive traders to get in, a little bit of a pullback off of that, and then breaking whatever that new high is, right? So that's kind of thinking.
Will most likely be between 195 and 200.
Yeah, which would probably be middle of next week if it were to play out. So.
Yep.
I'll be cheering for you. One more day below that resistance.
The scouting report meeting, by the way, he's pre-vetoing Boeing.
Oh yes, don't even bring it, Tim. Don't even bring it.
I guarantee it was on Tim's list.
I vetoed it a lot. Sometimes for better, sometimes for worse. But I vetoed it a lot, and I always say it's too gappy. It's too gappy. And then the other coaches say, Frank, you just hate Boeing, and I say you're right, but it's still gappy.
Frankie, would you agree that?
Well, I'll bring it up. Matt, you're more interested in trading Boeing.
Tim's lagging here. But Frankie, would you say one of the reasons you don't like trading Boeing is given the fact that, it's gappy, but it's gappy because of news? It's
and I would just live in fear that any day some news could come out, and it's hit on the bear side too, right? It's not like it's just the bull side of it. I've seen it both ways, where just the random news, just out of nowhere. And a lot of times it's not really news, it's headline news, right? For whatever, but that moves it, which then, plays into its gappy personality anyway. yuck, yuck, yuck,
I
yuck.
might, if Boeing just V shapes, I'm going to miss this. I am. I need to see another day or two on Boeing from an intraday perspective to really kind of map out that entry versus stop. But again, I at the same time, if somebody wants to be premature about it, trigger above that 192 with the stop underneath somewhere in that 185 range. I understand it. I personally need a couple days to let this cook to really kind of see those interday levels. I'm interested. I'm not Frank where I'm just like, nope, Boeing's off my list. And I'm not Tim saying, hey, listen, let's go buy an out of the money call option right now. So I'm like from a political perspective, I'm usually a centrist. I'm a centrist here. I see it. I need a couple days to cook.
Let's do some earnings.
Market's pushing intraday. Market's pushing intraday support.
Breaking that 3,000 really quickly.
Ooh, yeah, you are.
On some fervor. Look at that break.
I'm not of the opinion it has
It's
to.
not going to give me what I want, is it?
No.
It doesn't hurt to ask, but you shouldn't expect.
I'm still going to ask. I got 2 hours. I'm still going to ask. Give me what I want. Close above 3,000.
This can be. I mean, what's going to happen at the close? I mean, this is like obviously not a scientific game, and we have no idea, especially in this environment. But could you see a sell-off into the close? Could you see a rally into the close?
After yesterday, man, you can see anything. And I know that's the detailed analysis that everybody comes to.
I know, right? But that's where I'm at too. I'm like, God,
Yeah,
I mean, it honestly, it would not surprise me in any fashion, but I'm also not actively trading coming into the Friday close either. You know, I mean, by this time Friday, I mean, honestly, my work is done through the week. I'm going to get ready for the scouting report meeting. I have no open trades on right now. I'm going to get ready for the scouting report meeting, and I'm going to prepare for next week. So, you know, I want to see 3,000 hold. I think that's the best case scenario for those bullish technical setups. But if 3,000 breaks and we start to see massive volatility to the downside, we got to get ready for bearish plays.
Yeah, absolutely. And you know, the nice thing is there's actually some technically bearish plays that have developed. So.
Oh yeah, you're going to have some support breaks. You're going to have some support breaks. So, I mean, I'm willing to bet there's going to be more bearish trades than we've had in recent history on the scouting reports. I mean, you know, last week we only had like, I believe we had 12 potential bearish trades. Oh, and man, we had to work for those.
Yeah, we did. Yeah, we did.
But you're going to have potentially more bearish plays coming into next week, especially if 3,000 doesn't hold.
Yeah, we're gonna have to wait for that close to really be able to get a good assessment, because this obviously is real critical 2 hours. At the end of a Friday, Matt, I'm with you 100%. I'm usually exiting or hedging, but no new entries. I mean, I just don't make new entries by this time of the week. All right,
you know, Tim, especially, and a point needs to be made on that, especially if you know how to trade futures on Sunday. You know what I mean? I mean, if you're just the equity guy that just trades stock and options on the cash open to the cash close, number one, you need to get into a graduate program called futures. Number two, that's fine. You probably have to be a lot more cautious coming into the weekend. But if you understand how to trade the futures open, I mean, you can offset and hedge anything you need to in the futures market to cover whatever the equity is going to do on Monday morning. So, you know, I'm a little hesitant coming into the weekend, but you know, you do have that Sunday open that you can do whatever you need if you understand the futures market.
Run me through the earnings stocks here, Matt. There's actually a couple of real big companies, Adobe and Lulu, who had earnings. Then one, I find them interesting, Dave and Buster's, those restaurant plays. Three quick ones, Matt, if you can run us through the numbers, the data, and the market reaction.
Yeah, the big one today was Adobe here. Let's take it off the intraday analysis here. Adobe reported earnings of $2.45 a share versus the expectation of $2.30. If I can read my writing, that might be a zero, $2.30. Revenue came in close to in line at 3.1 versus 3.2. Revenue increased 14% year over year, and guidance was reaffirmed, which means they didn't up or downgrade. They just reaffirmed their guidance. A very lukewarm earnings report coming out of Adobe, and you obviously see the response here. It's up about 3% on the day, but really just nothing to see here from a trading perspective. Lulu, let's go ahead and take a look at Lulu's chart very quickly. Lulu's getting me a little bit excited. Number one, I like this company. I think it's of the two retail stocks in the market, the only two I'm actually interested in the long term are Lulu and Apple. And that's just due to brand awareness and brand craziness. I mean, the people that like Lulu, They don't like Lulu. They absolutely love Lulu. They live by Lulu. And yes, I do have a pair of Lulu pants, and my hoodie right now is from Lulu. Don't thank me. My wife has much better taste than I do. But Lulu here reports earnings of 22 cents per share versus the expectation of 26. So a little bit of a miss on earnings per share. Revenue came in underneath. Now, obviously, this is par for the course with these first quarter earnings results out of the retail sector. Revenue came in at 652 million versus the 724 million in expectation. Revenue declined 16.7% year over year. More than anything here, because this is actually above average for what I've seen in the retail sector in the first quarter earnings reports. Most retail companies I saw, 30, 40%, 45% year over year decreasing in revenue, massive misses on earnings per share. I can't remember which one it was we were analyzing yesterday, but lost like $5 a share versus the expectation of, $1 a share type of thing. That's what we've seen in the retail sector. And a lot of, investors and traders are like, okay, we were going through COVID-19. No, not in the first quarter. That was only towards the end of the first quarter. Second quarter is going to be worse. But so this was a better than expected report for me personally, even though they did not come in above the expectations. And I did like the fact that revenue did increase 14% year over year in the face of what was going on in the first quarter. The gap down is really interesting here. Can it be played? Can it be traded? Can it be swing traded? My answer is yes, but not today. We got to see that doji mark. You're absolutely right. The number one thing we will hear in the scouting report meeting today is needs a doji, needs a doji, needs a doji. And for those pro members of Tackle Trading, guys, you're going to see some of those setups in the reports this week, but realize trade your system, focus on momentum. You're educated traders. Don't chase the dragon and don't be premature. Wait for the proper setup, wait for slowing momentum, then and always remember Marty the elephant. Marty's coming down on the trampoline. He hits the trampoline. He doesn't automatically go back up. He slows his momentum and then he springboards back up. Marty's hitting the tramp. Let's see him slow down and with that upward movement in price. So keep an eye on Lulu. Just don't be premature here. Wait for the market to show you support is forming on Lulu. I do think it's a little bit of an overreaction to the actual earnings report, which is obviously understandable given the fact that in the last quarter, Lulu is up 140 points against $180. It is up over 80% in the last quarter. When you have such a metric rise in your price in the short term, the investor class is going to look for a rock star report. If they don't get it, they're going to profit take. It doesn't mean they're dumping. They're profit taking, looking to reestablish the position. So keep an eye on Lulu here. Probably coming into, if we do confirm, sometime mid next week. And then Dave and Buster's here. Dave and Buster's, nice little stay-at-home play, not stay-at-home play, but a nice little, I get confused with all these bullish theses, stay-at-home plays, pandemic plays, growth plays, distressed areas of the marketplace. It does get a little confusing.
This one's a skee ball play. It's a
skee ball play. I'll go with that. Okay.
Yeah.
Like the technical setup that's happening here. This is what you want to see from a technical perspective. We see that breakout of that W formation right there at $15, sets a higher high at 23, retraces right back down into $15. So the technical setup I really like from an overall trend and pattern perspective. Now the numbers came in at a negative $1.37 a share versus the expectation of 79 cents. Revenue came in underneath at 160 versus 190. They did not give guidance and they did not give revenue increases year over year. The report was not good, but again, understandable, especially in this space of the market. We've seen it across the board. We've seen it with cake. We've seen it with, it was now I remember it was Red Robin's, Red Robin. We saw it yesterday with Red Robin, when Red Robin had just that absolutely devastating earnings report yesterday. So this is a earnings report that when you simply look at the numbers, you're like, not that good. Actually, really not even lukewarm. Big misses on both. But when you look at actually in the context of what was going on in the first quarter, and especially coming in, you understand a little bit more. The reopening play, that is why it is dubbed the reopening plays, because they were shut down. I like it. Keep an eye on how it handles $15. I'd like to see a little bit of a doji on Monday, but as long as $15 holds on Dave and Buster's, you can map out some good short-term trading opportunities, in my opinion.
By the way, as we speak, the S&P keeps breaking down. We're down at
I got
2980
some
right
breaking
now.
news. The Fed's barking said a couple things really interesting that are probably weighing on market sentiment, triggering this intraday. As first of all, he says larger companies are planning layoffs, assuming economy won't come back fully. And then perhaps most interesting, he says the U.S. jobless rate is really in the high teens, way above the reported.
Oh, so they've been saying what we've been saying. Okay.
Nobody
Thank you.
believes that data from the jobs number. Nobody.
No.
Nobody
Oh,
believes
well.
it.
Jim Cramer does. He's been touting it all week.
Kramer does. Donald
Like,
Trump does.
no,
Larry
it
Kudlow
was a
does.
bogus report.
Treasury Secretary Mnuchin does.
But there's a Fed speaker saying, no, that report is wrong, which we have been saying.
My God, like everybody in the market knew that. The government agency, I forget it off the top of my head, they came out and said they were 3 million light on it last week. Okay, I mean, come on, guys, what are we doing? There's nothing
There
that
isn't
they're saying today that's not well
whatever
known.
the reasons, the report was bogus. It was false, probably purposefully so. And a Fed speaker saying,
Ooh,
"Hey,
I want to get that conspiracy hat on there, Chucky. I want to get purposely slow from
well, I
who?
mean, the thing is,
I
why would it?"
believe,
I want to see if you'll say it.
dude, the good folks at the Bureau of Labor Statistics would never lie about their numbers, Frank.
Dude, you know what I'm
like
thinking.
the folks at the S&P
Bring
and Moody's would
politics.
never lie about bond ratings in
No,
Listen, I don't bring politics
Oh
in.
my God.
I'm all about.
I got something to say here, Tim. Okay. Tim has this belief that everybody in the world is just such a hippie and they always do what's right and that are just altruistic with great intentions. I literally had this argument with him about because he's like, oh, the central bank presidents are just nice people that try to do the best for society. I'm like,
altruistic.
you're an idiot.
No, like Mother Teresa almost for the banking industry, right?
You might as well make that argument that Janet Yellen is Gandhi, and it's just that's like no. There's some bad actors in the marketplace, and so yes, the Fed's one of them. But Mark, that's not saying anything we don't already know.
Well,
Yeah.
the thing about it is somebody that might have been listening to our podcast for the first time, or we talked about it on Friday, we talked about it on Monday, and we're like, this report is crap. It's total crap. It's a total fabrication. It's nice to have someone like a Fed speaker come out and say, yeah, you guys, of course you were right. It was obvious to see.
It's Karkashi, that idiot.
Well, Karkashi, well, don't even get me started on the nuances of Federal Reserve members.
Who's the worst voting member of the Fed? It's either Karkashi or Dudley.
I cannot stand Karkashi with a mortal passion.
Karkashi's Twitter is like it's like he doesn't even try to be likable. He just tries. Karkashi's just a troll. I mean, I can't believe he is a voting member of the Fed. He's literally just a troll. He just tries to egg on gold buyers. I mean, he's just an absolute troll.
That breakdown's legit though, boys. I mean, whatever.
No, and it makes
whatever the
sense. Like
momentum
if the catalyst is Fed guy come in and, hey, who knows where unemployment is? It wasn't that. I mean, the market rallied 700 points on that report. Like, hey, everything's great. Yeah. I mean, there's a lot of stuff out there going on right now, right? You got COVID-19 spreading. You got the Fed basically acknowledging this week that the economy is a freaking mess and is going to be a mess for a while. Yeah. That's what it is, right?
I'm with you. Maddie, couple quick upgrades, downgrades, whichever one's grabbed your attention. And then we're going to give you some stocks and some coaches'
Well,
course.
the big one here today was Elon. Elon got downgraded. And Elon didn't get downgraded. He got smacked in the face with a downgrade.
Double whammy, right?
He got the double
put it on the
whammy.
hourly chart. It's breaking the 50 hourly right now with a lot of huge moving average pocket to the downside. You don't have your
This is
200
the day
on
he
there.
should have texted out LOL.
I was thinking that, Cody.
Yeah. Okay. So Tesla gets downgraded both on Goldman Sachs and Morgan Stanley. Keep an eye on Tesla here. I'd love a nice little kiss off $900 that would reestablish a good trade setup. So keep an eye on Tesla. General Motors got a nice little upgrade here from, I want to say Goldman Sachs gave them the upgrade. Apparently nobody cared since it's been given back all of its pre-market upward movement in price. Caterpillar here also got a downgrade from BMD here. And that is just, there's no trade setups on Caterpillar. There never is. So there's nothing to see here. On Southwest, we had, who was it? Credit Suisse. They've been boring lately. Credit Suisse. They've been coming in lately a little hot. They did a little upgrade downgrade. They did a little pair straight here, guys. And I want to get your take on it. They upgraded Southwest, and then in the same time frame, they downgraded UAL. Now Southwest getting beat up a little bit, ULA going up a little bit. Credit Suisse, you need to get a little bit more street cred there, buddy. But
could that be domestic travel versus?
Of course it is.
Obviously,
it's the biggest analysis in the history of mankind. We're seeing an increase in the virus worldwide. We're seeing potential second waves, or whether or not it's an expansion of the first wave. It is the easiest analysis of all time. Now, whether it plays out in the market, that's a different story. I'm talking about from the analysis perspective. I could see some dude or gal, 32 years old with zero market experience, and they're sitting in the basement of some Credit Suisse office somewhere around the world, and they're like, well, you know what? This was an interesting play 2 months ago. Let's go put it out there to the public. This sounds really, really smart. We're going to sound really, really smart to our employers, and we're going to do a little bit of an upgrade on Southwest because domestic travel, and we're going to do a downgrade on UAL, and then UAL says, yeah, we're going to go up 12% today. You're fired, dude.
That's funny, dude. I like the idea of the upgrade downgrade within the same space, though. I mean, give me more of those.
Matt, why are you in such a good mood? You're downright funny today. What's going on?
You finally got to watch some golf.
Finally got to watch some golf.
I like
Listen,
it.
I don't know how he watches golf
on DraftKings.
I don't bet on sports. I'm a trader, but why would I bet on sports?
What's fun, dude, this is DraftKings. They were talking about betting on golf on DraftKings yesterday on CNBC.
That's crazy.
If I would bet on golf, I would bet on Koepka every single major, every single one. I would split that with Tiger simply because I like to cheer for Tiger. And that's all I would ever do.
Is there a golf tournament or something going on?
Go home.
Listen, years and years and years ago, whenever golf came on, I went and found something else to do because Matt he wanted to watch golf.
Dude, I love watching golf on Sundays. Matt's much more of a fan for it than I am.
He watches golf.
He'll watch it Thursday, Friday, Saturday, Sunday.
Yeah.
Guys, next Sunday is Father's Day, and I'm going to be very depressed. Very depressed. My wife comes up to me and goes, hey, what do you want to do for Father's Day? And I'm like, nothing. I don't want to do anything. I'm just so sick of this. And she's like, what are you mad at? I'm like, because the US Open is not going to be played on Father's Day for the first time, and I've been watching that every year for like 25 years. I'm just done with all of this.
Yeah.
I can take the NFL shutting down. I can't take not watching Tiger try to win the Open. I just can't do it.
Why don't you just go play golf on Father's Day then?
Cody, why don't you go back to being hidden in your little video camera?
Triggered.
No, I don't want to.
Don't push Matt on golf. No doubt. He's got every right to have his emotions. And by the way, we are going to go play golf next week, Cody. So there.
See, there you go. And also, I would bet on Texas boy Jordan Spieth, by the way. Love that boy. Even though
he's lost a lot of money in the last 5 years, then.
Jordan Spieth.
I know I would have. He came out really hot, but he can come back.
Yeah.
I like Jordan Spieth a lot.
Yeah. Last section here.
Upgrades. Hold on, a couple more upgrades, downgrades.
Sure.
Mark took over with the conversation there. Take two, upgraded. Take two upgraded here today. Nobody cares. No trade setups. That is a wait and see and let a trend develop. Weight Watchers also got upgraded by Guggenheim. European banks came in today strong. Guggenheim came in with a WW upgrade. Nothing to see here. Maybe perhaps a break at 27. But until that happens, nothing to see here.
I'm on the other side, Matty. I actually have these.
I like the breakdown here too.
Yeah, I got these guys on my watches for the breakdown.
Yeah.
But whenever you see neutrality in a short-term uptrend versus a longer-term downtrend, that's K-trade type setup.
K-trade, break. Yeah, right. It always is a break above resistance, a break.
But given a little bit of a pivot low here, I like your call here. I'm not going to fight you on that. Nice little break under 23, Frankie. Is that what you're
I'm liking it. Yeah.
Right. Get underneath that 50-day moving average. Close underneath that historical.
Get rid of pretty much everything at that break. If that breaks.
Look at that intraday there. Look at that intraday at 23 by 23.10. Oh yeah. I'm with you on that, Frankie. I'm not going to veto you.
Awesome.
There we go. And then the last one, Dave & Buster's had earnings today. They also got upgraded, I believe, and SunTrust gave them the upgrade.
Mm-hmm. Yeah, I like that Dave and Buster's setup, by the way. I loved your analysis there a few minutes ago. Guys, let's make our last transition here into our coach's corner and kind of get final thoughts. Couple things out there. If you are new to our channel, as always, subscribe, click the bell, come back and join us each and every day. Whenever the markets are live, we go live at 12:30, 12:33 sometimes.
Usually 12:33.
I was being kind to us right there. We're usually at least a couple of minutes late, but that's okay. We're around that 12:30 mark. We have a lot of fun. We do this show for about an hour and a half during the day, each and every day, and really loving it. If you're out there and you're Team Tackle, representing the chat, hashtag Team Tackle. Go ahead.
I know we usually promote something at Tackle, but one of our students, Solomon and Melarosa, they have started a new podcast called Retired 25. Oh. And they just barely started it. And the reason I bring it up is Solomon contacted me earlier this week and he said, "Hey, Matt, would you mind coming on and being a guest on our new podcast?" And so I did an interview with Solomon yesterday. And he asked me, I asked him, I said, "Hey, Solomon, how long do you want me to go on this?" He's like, 45, 50 minutes, something like that. And I'm like, okay. So you wanted a long form, open conversation? Yeah, let's get into it. I'm like, yeah, Solomon, you don't know what you're asking for there, buddy. So it is about a 2-hour interview, but we talked on the benefits of being an entrepreneur, investing, trading, things we're seeing in the market today. But I just want to give Solomon and Melarosa a shout out for getting out there and trying to get their message out there. And, it's, I think, I've always said Tackle Trading is a community of like-minded individuals coming from around the world to unify and navigate this market together. And so whenever I see one of our students get out there and try to put their neck out there to do something positive, I like to promote them.
Yeah. When they're dropping that episode?
I think they're dropping it. They dropped their first episode yesterday. I think I'm on Saturday. They're dropping on Saturday.
Frankly,
I told Solomon I'd put it out there on my social media channels, and I'll definitely put it out there on our Tackle Trading channels as well.
And Frank, when you see that, will you retweet that on the at Tackle Trading Twitter?
Of course,
as well?
Yeah, absolutely. Yeah, that's awesome. That's awesome to hear.
Yeah. The great entrepreneurs right there. Retire at 25. Is that what it's called?
Oh, it's a great brand name. Are you kidding
me?
I
love it.
Yeah, it's good stuff.
Very smart.
And by the way, Solomon, Melarosa, both of them are great, fine traders, but Melarosa she's special from a trading perspective. She's got the it. Like Melarosa is an amazing trader.
I love it. I love hearing it.
She did it right. She focused on education. She paper traded, virtual trading, tracked her journal for an entire year. She went live with her system and is doing absolutely amazing.
Love
That's awesome.
That.
Yeah. Putting the time in
that, but love to hear it. Yeah, that's awesome work.
Yep. All right. Last section here, guys. Just kind of some final thoughts from each of the coaches. Frankie, on Friday, Frank Day, I'm going to let you run whatever charts you find interesting. And then we'll just kind of get final thoughts from everybody else. Any charts grabbing your attention, Frank?
There will be some, of course. First off, I mean, there's going to be a lot that look like, Play or, UAL or Boeing. So, you've got plenty of things to choose from if you're looking at a retracement that develops into next week. So you don't need me for that by any means. A couple of breakouts that I think are worth monitoring going into the next couple of weeks. Number one is Peloton, PTON. Developed a very, very clear level of resistance at just shy of $50. Strong stock, it's a trade.
I like a 50 break here, Frankie.
I'm a big fan, and I'm glad that it's taken some time to cook. I thought maybe it was going to happen yesterday, and I was kind of hoping it wasn't. So because I'm not there, so of course I was hoping it wasn't. So I really think that's worth keeping an eye on. Similarly, BILI. Not quite as clean as well. We haven't tested the same resistance zone, I guess I should say, as many times. But I've been
about 36.
So yeah, a little bit of a Billy break. So there's a few breaks out there. Things will develop that didn't break out this week, and again, this may not happen at all. It may not happen next week. But things like Tractor Supply continues to hold that 124. Now you maybe could argue a pullback if that was your thing. So on the bear side, I mean, this was what was kind of exciting, finally some legitimate bearish trade setups. We've been working, we had old Pfizer on the reports this week. I can't remember which side they were, option or stock. Watch for a little floor to develop there. I mean, they sold just tremendously yesterday with the market. But I'm watching for a little floor there if we continue to sell. I was actually surprised how many things were kind of breaking or threatening to break support over in the healthcare sector. Certainly something worth keeping an eye on. Lilly, another example, breaking down here today. Boston Science knocking on the door. BSX knocking on the door of a breakdown, so some weakness. You had Amgen.
If you're going to short Lilly, short the other one, BSX tackle 25.
So you do like that. Yeah, and
you had
Amgen. Amgen's interesting because they've been holding their 200-day moving average for the last month, really struggling, and then just completely fell through it here today. Maybe that's not a trade, but I think it's worth monitoring on a bearish watch list. Personally, Tim and I were talking Pepsi. I love the way that Pepsi's developed from a bearish perspective. We broke down yesterday, holding that support level here today. So per my rules, at least, have not confirmed that breakout. The 2-day floor, would love to see a little floor and then a break of that floor. I think that's an interesting bearish setup personally. You're seeing a lot of bears in the staples, Campbell, CPB knocking on the door of support, Conger Brands knocking on the door of support, Pepsi. So a lot of things, PPC, another one knocking on the door of support. So a lot of things just hanging by a thread at support over in staples was something that really stood out to me personally this week. Beyond that, you've got that energy pullback, and that's an area that interests me personally. But much like the rest of the market, we're just going to have to let it develop. I'm kind of a wimpy coward, so I like the cheap plays like Marathon, MRO as a watch list candidate in that space. It's a cheap stock, low risk, high reward type of a deal if I get my setup where I want it to be. But if you don't like Marathon, there's a lot of things that look just like that, both in energy and outside of the energy markets.
Mm-hmm. Mm-hmm. Love it. And there's so many good bear setups developing in those sectors you had identified. It's going to be an interesting scouting report meeting, guys. Obviously, we got both sides in play for the first time in a few weeks, and whatnot. Marky, final thoughts. What are you watching in this market Friday afternoon? I know you've got your weekly prep session here in about 25 minutes for pro members. What's on your mind there, Mark?
Probably not anything different than you guys, right? Like, I really do think our meeting this afternoon is going to be interesting because it's about, all of us are technicians. Some of us like some patterns better than another, and it's just finding and thinking through, because we don't have the cleanest patterns out there. So, I'll probably spend a lot of time this weekend looking through patterns and trying to develop a game plan, because you don't got a lot of clean setups because of the weird price action to close the week. So that's what's on my mind to end.
Kind of watching the close here. I think everybody will be, obviously. Maddie, what about you?
I think coming into the weekend, it's important to get those bearish watch lists prepared, right? Nobody knows what's going to happen on Monday, not in this market condition. You got, 2.5 days of data coming in. You got the futures market open Sunday. I think it's important to be prepared for the bear list, because the concern I have, the 1 day buy the dip, they tried to do it overnight, and the Dow was up 600 points. Now it's in the negative for the day. S&P was up 2.5%. Now it's in the negative for today. Does that throw a little bit of cold water on those buy the dippers that, basically, like Mark said, in the face of, what was happening yesterday, we saw, people actually add to positions, in some of those distressed areas of the market. If the market does recover above 3,000, I think that's a positive sign for that coming into the close here today. But I think you got to be prepared much more coming into this next week than you have in recent months. When you're looking at this trend on the S&P 500 here, we really haven't seen anything like the volatility we saw yesterday since the bear sell-off, when we saw the market just absolutely butchered, in March and April. Can we see a repeat of that? I'm not calling for that, but this is, the type of price action and volatility we saw in March and in April. This is the type of day we saw in March and April, where the market tried to fight back up and got absolutely butchered back down. So, we're early in this. I'm still seeing this as a bullish retracement. I think you, for those pro members out there, I think you can expect to see some downgrades in the market coming into this week to reflect the concern we have in the broader market. Again, I'm still seeing this as a bullish retracement with opportunities in some of those areas of the market that are sitting at support. But I do think you've got to be prepared that that if we don't trigger into those bullish trades, that if the market does continue to sell off, again, I don't think that's the most likely, but I do think it's in the cards. So with that said, focus on your watch list, be prepared to pull triggers on violations of support from a bearish standpoint, and be very cautious from an investing perspective right now. Write calls against those. Well, you should be writing calls over elevated coming into the last 2 days, but make sure you're covered on long-term investments coming into this market, because it could spin out of control. Again, not trying to fearmonger, not calling for that, but this is what we were seeing when we first started transpiring here. Look at this price movement right here on that day. Up, good, healthy on the daily, gets beat back down. What happens? Boom, 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 boom. Once you remove that belief in the buy the dip, they capitulate real fast. That belief is still there today. It is still there today. We're seeing it in the data. But if you continue to sell off into this close, and if we don't see some positive coming into the futures market on Sunday, this could get ugly here. Be prepared to take advantage of it.
Mm-hmm. Love all those thoughts. And obviously my final thought is we finally have a good old fashioned bull bear debate, going on here. Whatever side ends up winning, we'll wait and let the market kind of determine that. We're going to be breaking all
Matt,
that.
I got a question for you. What is the more worrisome day if you're a bull? Yesterday's or today's?
Today by far.
Yeah, that's what I think too. That,
it's not even close, Mark. Today by far. Yesterday, nobody can predict the 5, 6, 7% down days, right? But they happen. And it's the reaction, it's the post reaction to that is really telling. And when you have that just buy the dip mentality, BFTD, right? And you're just, and if that gets blasted after all those distressed areas got blasted this week, and all of a sudden they're getting hit over and over and margin called. Yeah, today a sell-off into the close and without recovery on Sunday, futures open, that to me is far more devastating to the bullish argument than that 7% down day we saw yesterday.
Yeah, I would agree with all those things. Too. All right, guys, great show here today. Look for information from Tackle Trading over the weekend from our scouting reports, our newsletter. We're going to get together as a team after the bell and start working on, one of our premium products. I mean, that's something that our pro members look forward to each and every week. Mark, how do people find your webinar here in 18 minutes?
Just go to tackletrading.com. It's there on the calendar, and easy peasy.
I'll try to be sneaking in there halfway through it.
Yeah, Frank's been joining me the last couple of weeks at the end, and I listen. Frank is one of the best technicians you're going to find. He just is, and so having Frank's insight on just analyzing technical analysis, it makes any show better, right?
Yeah, appreciate that. It's fun. I enjoy coming in and talking with the team. So I'll see you a little bit. Later.
Oh, if I thought you were a crappy technician, I just wouldn't say anything. But
yeah, that is true. Frank's a nice guy.
Frank's a nice guy. No, you're a great technician.
Very quickly, for those of you pro members out there, when we're putting on a webinar for our pro community, it's always listed here in the events calendar. And to get the link, all you have to do is come here to the 12th. There's the Traders Lounge. There's Mark's Mind of a Trader at the closing bell. You click on that. It pulls up the landing page, and you have the Zoom link right there. Boom.
Mm-hmm. And if you're not a pro member yet, pretty easy offer. There's 15 days free. There's a link in the comments in the chat below. Always, whenever we do these YouTube videos, come and join us. I know you will love it. No question about it. All right, guys, we are out for today. We'll see everybody back on Monday with our halftime show.
Have a great weekend, everybody.